last week I shared some of my biggest losses of 2024 and the lessons that I learned from them. Today we switch to my biggest wins of 2024. Unfortunately, I had more winners than losers last year, and you will see that again there are some interesting lessons to be learned here. Hey, this is Yossi. I run a small investment firm that specializes in REIT investing, and in today's video I'm going to discuss 4 specific REITs that resulted in large gains for us last year, and then I will also highlight some similar investment opportunities that could be the next big winners. So let's get straight into it. The first 2 companies that I want to cover here are Trion Residential and Apartment Income REIT, which are 2 REITs that got bought out last year by Blackstone, and we managed to predict these buyouts at High Yield Landlord. We bought more shares of Trion Residential in October of 2023, and we then predicted that it was a likely buyout target for Blackstone. Here's what we said back then. Blackstone is the company that eventually bought out American Campus Communities, and today they already have a $300 million investment in Trion, representing about 12% of the company's market cap. They even have a seat on the board. Blackstone has aggressively grown its portfolio of single-family rentals in the past years. It even bought a $6 billion portfolio in 2021 at a 3.5% cap rate. And shortly after that, Blackstone announced that it was going to acquire Trion, paying a large premium for it, resulting in a nice quick gain for us. We then looked for the next potential buyout target, knowing that Blackstone was very interested in discounted residential rates, and that's how we ended up investing in Apartment Income REIT. We then noted that Apartment Income REIT is today one of the biggest investments of Land and Buildings, which is one of the biggest REIT activist investment firms. Recently, they pushed Trion Residential to put itself on the market to unlock value, and ultimately Blackstone ended up buying it out for a 30% premium. Could Apartment Income REIT be next in line? It wouldn't surprise me. Not only are they the cheapest, but also the best performing, and they are the ideal size for a buyout with the $5 billion market cap. And once again, we scored big. Just 1 month later, Blackstone acquired Apartment Income REIT, and again, it paid a 25% premium. And so here, both combined together, our investment in Trion Residential and then our reinvestment in Apartment Income REIT end up roughly doubling our money over a short time period. And so the lesson here is that it pays to invest in likely buyout targets in the REIT sector, and this is especially true today with many REITs trading at steep discounts relative to the net asset values and many private equity players being flushed with cash to deploy. We think that today the most likely buyout targets are residential, retail, and industrial REITs, typically down-owned properties that have some type of value-add potential. Remember that these private equity players like Blackstone, Starwood, Brookfield, and so on typically want to buy something on which they can work to increase its value as well. So they don't want to just hold an asset passively and wait for it to gain value. They want to force that value appreciation. So it's important for these REITs to have some type of value add potential. This was the case of Trion as well as Apartment Income REIT. Typically, the most likely buyout target also will have high G&A costs due to their small size. And so this also allows these private equity players then to cut down on the management costs to make it more efficient and increase the return on their investment. A good potential example of that today is Aimco, ticker symbol AIV. This is a small residential REIT that owns a lot of properties that have value-add potential. They trade at a large discount relative to the net asset value, one of the steepest discounts in the residential sector today. They've been selling a lot of their assets to buy back shares and deleverage their balance sheet in order to try to unlock value for shareholders. So the management is very shareholder friendly. And so I think that this could be a potential target next for these private equity players. Also, Land and Building, which is this big activist investment firm that I mentioned earlier, also is a big shareholder of Aimco today. So they're probably pushing them behind the scene to sell themselves to a private equity player. We are currently doing due diligence on this company for the members of High Yield Landlord, and we will soon post our report. If you don't want to miss out on it, make sure to subscribe for a 2-week free trial. It will be the first link in the description of this video. Then another big win for us last year was Essential Properties Realty Trust, ticker symbol EPRT. This was a particularly big win for us because it was our biggest REIT holding, representing about 10% of our portfolio. We invested heavily in it because we thought that its unique business model had the potential to deliver above average returns with below average risk, and that made it an ideal portfolio anchor for us. And that really paid off in this recovery as it massively outperformed its close peers like Realty Income. We've now sold half of our position because we think that it's slowly approaching its fair value, but we still want to hold some of it because its superior business model is still likely to drive further outperformance over the long run, but the upside from repricing is quite limited from here. At over 10% of our portfolio, our position size was getting too big, and so for this reason we decided to sell some of it to redeploy in better opportunities. I think that a better opportunity today in the net lease sector would be Canadian NAREIT. It's trading at a roughly 2 times lower FFO multiple. That's despite historically having managed to grow even faster than Essential Properties Realty Trust and owning a larger share of properties that lease to investment grade rated tenants. It is dealing with more leverage right now, and that is why it's so heavily discounted, but interest rates have been cut more aggressively in Canada, and we expect further cuts in 2025. And for this reason, we think that this REIT is now well positioned to strongly recover in the coming years. So what's the lesson in our investment in Essential Properties Realty Trust? And it is that it pays off to bet big on your highest convictions. We thought that the reward potential far outweighed the downside risk, so we invested accordingly, and this single success more than made up for many of our smaller losses. And now I'm gonna discuss IRSA, which was our biggest win of all. In early 2024, we recognized that something big was potentially happening in Argentina, and so I flew there to investigate. Milei had just won the election, and he was pushing for some major reforms that had the potential to bring more foreign investments to the country and improve the market sentiment of their stock market. Even then, their largest REIT, which is IRSA, was still trading at a huge 70% discount relative to its net asset value. I ended up touring most of their biggest assets. I talked to some local professionals, and the sentiment really seemed to be turning around, and IRSA had major catalysts to unlock value. Less than a year later, we end up selling our position, earning us a 147% total return over a 10-month holding period. Today, the REIT is still cheap, trading at a 30% discount to its net asset value, but we decided to sell it anyways because there are other REITs in safer and more developed markets that trade at similar discounts. A good example that right now comes to my mind will be BSR REIT. It owns properties in rapidly growing Texan markets, it has a strong balance sheet, a great management team, and yet its discount to NAV is very similar to that of IRSA, which is clearly a riskier story, owning mostly malls and office buildings in Argentina, which is a much shakier market. And so we thought that the risk to reward was getting less compelling relative to some other REITs, and for this reason we decided to sell it. The lesson in this case is that it really pays to have boots in the ground. It's important to remember that REITs are real estate investments, and to understand real estate, it helps to be there in person and talk to local professionals and see what's really happening. And in this specific case, it really paid off for us. Without this trip, without having met the local professionals, without having toured the assets, I probably wouldn't have had enough confidence in this pick to invest heavily in it and to then hold on to my position, as it more than doubled in value over a short time period. But having done this trip really helped me to gain more confidence. With that in mind, I'm planning a trip to Brazil next to go investigate Patria Investments, which is rapidly becoming one of our largest holdings at High Yield Landlord. We think that this company has the potential to deliver similar very strong returns in the coming years, but I want to make sure that I'm not leaving any stone unturned. Perhaps I'm missing something, and so I'm going to Brazil next to visit some of their biggest assets, also talk to local professionals, and potentially even meet their management team. We of course also had some smaller wins in Outrun Media, Avalon Bay Communities, Regency Centers, Simon Property Group, but our biggest wins really were these two: Buyout, Essential Properties Realty Trust, because such a big holding, and IRSA, which more than doubled our money over such a short time period. Now, if you want to access my full portfolio going to 2025, you can join us for a 2-week free trial at High Yield Landlord. You'll gain immediate access to my portfolio. You won't be charged anything in the first 14 days. If the service is not for you, you can cancel anytime, no question asked. You won't be charged a penny. And finally, if you could please click the like button, that will help me a lot to keep on growing. Also subscribe to the channel. Thank you, and see you at my next one. Bye-bye.